Casper, what is the outlook for the economy in 2022 and 2023 by one of the most important financial journalists of the country where we're from the Netherlands?
And you can better ask him.
No, we did actually ask him, yeah. Because tell people where were we? What have we done this week?
We were, our office is in Malaga, area of Malaga, and we had a seminar with that person.
Yeah.
He's called Durk, quite a Dutch name also. 600 kilometers from here in Altea, close to Benidorm, close to Alicante.
Yeah.
And we had a seminar with a lot of people, more than 100 people, and he talked, and we did it. We had also a panel discussion, and we discussed his outlook about the stock market and the economy for this year and for next year.
Correct.
And we want to highlight some things we do agree with and some things we don't agree with.
No, exactly. It was really funny because I gave you both some statements at the end. First he had his pitch, and then afterwards you and Durk went into a discussion. And you guys were really fitting well together, but you had different opinions about different topics, very important topics. Where the market is going, are we at the lowest level? Is the war in Russia going to explode further? Is it going to escalate?
And he was quite optimistic.
Yeah, and
almost on anything.
And I found it funny that you were not so positive, because
no.
in general you're...
I'm a positive person.
Yeah, you are.
Yeah, but I think we are not there.
No.
And that's also not only that I'm thinking that, but also other people. For example, he was really positive on the war, and it's also a vision estimation. He was,
of course, yeah, but you need to have a statement.
Yeah. But and he gave an insight about the European markets and the world markets. If you look, for example, if the MSCI, the Europe is down 11%. But if you look at the world without Europe, it's flat.
It's flat, yes.
It's flat. And that's quite interesting, because with the upcoming markets also in there now, I think they are also in that MSCI
they are in
index.
there, some of them, yes.
So that's flat.
Yeah.
So Europe is not doing well.
No, Europe is...
But and he also, I think for the discussion about the economy, it's really important how the unemployment rate can hold the high levels that they have now. And he said that okay, at the moment you see already a shift in there.
Yeah,
and
he says that the
it's Friday, and today they came.
What he said is that the medicine that is implemented by this, he talked about the chemotherapy that the central banks are using to fight the inflation is actually starting to show results, because you see that the number
less jobs.
The number of jobs are going down, which is actually quite strange, because you want people to have a job. And what is really funny is that the drop in number of jobs is similar. If you look at the chart that he presented to us and to the people, is similar to the ones in March 2020. So you see, we are in a situation where the amount of new jobs created is dropping really heavily. Today, however, there was an expectation, because the non-farm payrolls came out, and it's a really important indicator in the US. It is basically an indication on what people directly feel in their expenditures, right? So the consumers, if you don't have a job, obviously you feel it directly. And the amount of new jobs that were created was expected to be 250,000. We were just literally sitting down, and it came out it was 263,000. So in general, that is, when the figures are good, it's good for the dollar. That is a fact. But the dollar has already become very, very strong, and the market has not. So I'm actually, to be honest with you, I'm a bit anxious how the stock market is reacting at this moment.
Yeah.
Why don't you check just quickly? I just want to know.
Okay, but then you keep on talking, no?
Yeah. The non-farm payrolls, for people that don't exactly know what it is, it's basically the number of people employed during the previous month. So the people that got a job in the previous month, in this case the month of September. This year, every month, the expectations were beaten by the real figures. So the highest number of new jobs created, people employed, was actually in June this year, about 580,000.
I know what the markets are doing.
Are they reacting positive or negative on it?
They're down.
They're down.
Look, everything is red.
Yeah. That's what I was expecting. Yeah.
You see?
Yeah.
Drops in the
Boom.
market.
Yeah.
And you see all over Europe, eh?
And the dollar possibly picked up.
Possibly. Then I have to look somewhere else.
But you see, we're real live here. We're checking the market because I think it's important information. What is it? Can we check the dollar? Yeah, but it's 5 years, my friend.
Oh, sorry. Yeah, but no, I didn't. No, euro down against the dollar. Dollar is getting stronger.
Stronger, yeah.
Extremely.
Quite, yeah. So exactly, just what I told you.
Look,
And this is no
98 to 97.
So we can see that the
and a
dollar
half
becomes
in a
stronger
split
because
second,
because of this. So interesting times. Not good for the stock market, dear people.
But again, he was positive, and also of the outlook of Europe, the European stock market, and especially the Dutch stock market. But I think it's all connected to each other, and he expected that more profits of the big companies in the main indices for next year, 2023, but also to 2024. On the other hand, you see, and he also mentioned Nike last week came with figures, and they had some bad figures, less good than expected, but also because they have a lot of stock.
Yeah.
And probably they will dump the stock before Christmas.
Yeah,
Big sales.
possibly.
And he was in the news again this morning because he is a journalist. He was on the Dutch television and he talked about, and that's also a topic where we wanted to talk about because I think it's an indicator. Some companies can be indicators of markets, I think. And Samsung came with figures and they were really bad.
They were not good. No. Outlook. Mainly the outlook was really negative.
Yeah, but also the profit was 32% less, and it was less. The drop was bigger than expected. And it went only, and that was also quite interesting, went down 2%. And if you see they make also, Samsung makes tabs, and they make chips also. The biggest chip,
Samsung,
they're the biggest telephone producer in the world. They're bigger than but they're a really big chip producer. DRAM memory chips, and they have also NAND flash, and the prices fell also 40% for the first group and 8% for the second group. So the prices they can ask less because there's less demand. And if you
mainly on the telephone part, so I'm just asking you. So not so much on the TV part or something.
No. And you can nicely compare the mobiles with Apple.
Yeah.
What Apple came out for the third quarter. It's a broken book here. In June, if I'm not mistaken, and their results were better than expected. Their revenues were expected for $38 billion from mobiles, and it was 40.6, so much better than expected. And a year-to-year growth of 3% of sales of mobile phones.
Interesting
and
stuff
I was thinking, you know what I was thinking when I saw it, and I wrote it down. And what I was thinking, hey, the Apple markets is mainly the US and Europe. Samsung is, of course, a lot on the Asian market. They're the biggest in the Asian market, and of course China. And China is going, of course, we discussed it a couple of weeks ago. They have really big problems.
Yeah.
And but I didn't see it in the figures because maybe the decrease of sales of mobile phones is coming from China.
Yeah, but what I think, and I don't know if you checked.
You don't agree with me?
No, I'm not sure because I didn't. Maybe you saw it, but I think maybe Samsung is losing clients because an Apple user is an Apple user. If once you have an iPhone, I don't think you swap to Android quite quickly. But I think what happens with Samsung, if you look at the sponsor of the Champions League, which was on Tuesday, it's Oppo.
I'm not going to talk about the Champions League.
No.
So
every time
you try to put it in the Champions League on Tuesday.
That little wound in there. But Oppo is making really, really good phones, and they're really growing in Europe and in other parts of the world. And I think they're taking a lot of market share from Samsung phones. That's what I think.
Probably it's a combination.
Yeah.
So the outlooks from him were quite good, but the signs of the market from Nike, that's an indicator, and Samsung, but also ByteDance, they are not on the stock market. They planned an IPO for this year, I think it was, and they postponed it. So we can't. The figures is a little bit difficult, and it's quite a close company. It's a Chinese company. ByteDance, they are the owner of TikTok, and in Europe we only know TikTok, but in China they have also other products. And their revenues grew with 80% to $61.7 billion.
Wow.
But they made a loss of $7 billion because
something went wrong.
But they say it's because of a accountant rules that they had to write off some convertibles. Okay, I can't check that. But what I saw is, and that was quite amazing figures, I think they spent $14.6 billion on R&D, research and development, and they spent $19 billion on marketing.
Wow.
I thought TikTok was a program and you can use. I don't have it on my
for
phone. But you can use.
adolescents.
Yeah, and then but where do they spend that amount of money on marketing on? And when they raised money the last time, I think it was this year, they were valued for $300 billion.
Wow. Yeah, that's interesting stuff. Yeah.
So I think you said you when you were talking to me. When you were talking to me, you said you are less positive. I am indeed less positive than Durk, Nike, the big companies that come with figures, Samsung.
Yeah, but
ByteDance,
don't forget what happened Monday morning. What woke us all up with the Credit Suisse problems.
Yeah.
We don't want to talk about it too much today because it's a topic that you can spend a whole session on, and a lot of things have been written about it. But it's quite something that happened there. It just if you allow me to just quickly, because I think people don't really understand it. It's pretty simple, guys. It's when you have an insurance, the price of the insurance. So what is happening? Actually, banks take on insurances for their debt. So they have a debt position, and they take on insurances with buyers of that. Somebody buys that insurance, and in return for that, they need to pay an interest, and that interest is always on general. If you look at the benchmark in Europe, banks need to pay 1-2%. What happened with Credit Suisse? They all of a sudden had the price. So the price of the spread of the, in this case, the insurance, the return, the money that they needed to give back to the buyers of this insurance was almost 6%. So the market said, "What was going on here?" And then another thing, what we heard is they were starting to call clients. They were getting all the staff together. So there is some rumors about a second Lehman Brothers here.
Yeah, but last thing, sorry to interrupt you.
Go on.
I spoke, you know the story, with a client of us Wednesday evening after the seminar, and he said that is his bank.
Yeah.
And I thought it was.
You got a phone call, right?
Yeah. Saturday evening, I got a phone call from his bank, from his account manager. Nothing is going wrong. And then I said to him, "Is this the first time you were called on a Saturday evening?" And then he started laughing. I said, "That was the first time I was called."
Yeah. So it's not. I mean, you can say it. They were selling the biggest piece of real estate that they own in the center of Zurich. It's like a monumental hotel. They're selling that just to create liquidity, and I think something is not going well there, guys. So we have to be quite aware.
Be careful.
Be careful. Be very, very careful. Okay.
Durk gave us a positive insight.
Definitely.
If you want to have more about that, you can reach out to us. We are willing to share that. I'm unfortunately a little bit less positive, but I hope Durk is right.
See you next week.
Give us a thumb. Thank you so much.